Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 26th, 2025, and we are putting Amazon stock, ticker Amazon, under the microscope. There has been a whirlwind of news recently, creating a classic bull versus bear debate, and the chart is reflecting this uncertainty. First, let's talk about the recent events that have been pressuring the stock. Several reports highlight a significant pullback in AMZN's share price despite strong Q3 earnings. The primary concerns seem to revolve around heavy spending on artificial intelligence, with analysts like Rothschild Redburn downgrading the stock from buy to neutral. They've raised questions about whether these massive AI capital expenditures will generate the same high-margin returns as the initial cloud boom. Adding to this, Amazon recently issued about $15 billion in bonds to help fund these investments, which has made some investors nervous about free cash flow and rising debt. On top of the financial concerns, regulatory pressure is mounting. The EU has designated Amazon as a critical technology partner, placing it under stricter supervision, and the company is still dealing with an FTC antitrust lawsuit in the US. This combination of factors triggered a slide below its 50-day moving average around November 18th, a key technical warning sign for many traders. However, it's not all bearish news. Needham analyst Laura Martin has reiterated a buy rating, expressing confidence in Amazon's ability to manage its investments efficiently. Furthermore, the stock's recent peak was fueled by excitement over a massive multi-year AWS cloud contract with OpenAI, showcasing its dominance in the cloud space. The core business remains incredibly strong, and the upcoming AWS re-invent conference in early December could serve as a major catalyst to address these AI spending concerns head-on. Now, let's see how this dramatic narrative is playing out on the charts. Looking at the daily chart for the past year, we can see the broader story. After a period of volatility in the spring, the stock established a strong uptrend through the summer and fall. You can see this massive gap up right here at the end of October, which was the reaction to those very strong Q3 earnings. That event, combined with the OpenAI news, sent the stock flying to a 52-week high of $258.60 on November 3rd. But what happened next is directly tied to the news we just discussed. Let's zoom in on this recent period of volatility. From that peak of $258.60, the stock entered a sharp correction, dropping over 15% to lows around $217 just a few days ago on November 20th. This is where the concerns about AI spending, the bond sale, and the analyst downgrades really took hold, wiping out all the post-earnings gains. This pullback has established some very clear and critical levels we need to watch. The area around $228 to $235, which acted as short-term support during the climb, has now flipped to become near-term resistance. Yesterday's close was right at $229.67, so we are currently testing the lower bound of this resistance zone. To the downside, immediate support is being watched in the $214 to $215 zone, which lines up with what analysts are pointing to as the 200-day moving average area. A break below that would be a significant bearish signal and could open the door to a deeper correction towards the next major support zone between $205 and $208, which is where the stock consolidated before its Q3 breakout. So, the battleground is clearly defined. Bulls want to reclaim $235, while bears are looking for a break of $214. Now let's switch to the 1-hour chart to analyze the short-term action. Here we can see the bounce off the lows around $217 last week. The price has been making a series of higher lows over the last few trading sessions, which is a constructive sign for the bulls in the very short term. We saw a strong push yesterday, November 25th, which brought us right up against this resistance level. The key question now is whether this is just a short-term bounce in a continuing downtrend or the start of a true reversal. Volume has been decent on the up moves, but not overwhelming, so conviction isn't crystal clear just yet. Drilling down to the 15-minute chart, we can see yesterday's price action in more detail. Notice the steady climb throughout the day, with pullbacks being bought up, indicating intraday buyers are present. The price is currently consolidating near the highs of the recent bounce. This intraday strength is what bulls want to see continue to challenge that overhead resistance we identified on the daily chart. Let's pull back to the daily chart one last time to put everything together. The long-term picture for Amazon's business is strong, but the short-term technicals and news flow have created a precarious situation. The stock is at a critical inflection point, squeezed between recent bearish momentum and a potential short-term bottom. To recap the key price levels to watch, major resistance is at the $250 to $260 highs. Near-term resistance is the $228 to $235 zone, where we are right now. Immediate support lies at $214 to $215. And crucial, stronger support is in the $205 to $208 area. So, what are the potential scenarios? A bullish scenario, which I'd give a 40% probability, would see the stock hold above $220 and decisively break back above $235. Positive news from the upcoming AWS re-invent conference could easily be the catalyst for this. A bearish scenario, also with a 40% probability, would see the price fail at this current resistance and break below the $214 support level. This would confirm the downtrend is still in control and could lead to a test of the $205 support zone. The most likely outcome in the immediate short term, with a 60% probability before the AWS event, is a sideways consolidation. The stock may chop between roughly $215 and $235 as the market waits for a clear catalyst. The most important thing to watch for is how the price reacts to these key levels and any headlines coming out of the AWS conference in early December, which will likely set the direction for the next major move. This concludes our analysis of Amazon. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to Explain the Charts, and leave a comment below with your thoughts on Amazon. Thanks for watching, and we'll see you in the next one.